Good morning, everyone. Welcome to LeapMeet 80, where we will go over September 2022 trade log and also do some technical analysis for coming week and month. So let's just start with looking at the charts because, as you know, charts never lie. And does give us like very good indication of where we are, what has happened so far in the market, etc. So let's do that. Can you guys see my screen? Okay, perfect. Okay, so this is the SPY chart. Let's take a look at this. Is where September started. And after this big rally back in August, which ended about middle of the August, pull back September first week, market pretty much held on to the support levels and tried to bounce, then ran into resistance, and then pulled back, consolidated for about 4 days, pulled back again, consolidated about 4 days again, and pulling back again now. So that was the month of September. What we saw here was basically market trying to run up and then failing and pulling back, and month ended with fresh new lows in SPY, which indicates very weak market. We are officially in bear market territory again. As of Friday, we are down, SPY is down about 25.61% from highs. So that's pretty significant. I'm just going to move it out of the way for now. So that is pretty significant. It just went through support level, and it doesn't matter. Overall, when you zoom out, now we are near this other level where we found decent support before, which is about 254, as you can see, and the resistance would be 259, where we are at pretty much right now. So 359 is the resistance on the upside. Next resistance support is 354. And if we break below that, then pretty much, as you can see, there is no other support, like strong support, at least until almost 342. So these are the possibilities. The levels you need to watch are those levels. We'll talk about it again in a little bit, but overall, market is firmly in bear market territory. There are green days and some sort of like run up really freely along the way, and you will see that like for example, this pullback that brought us here, there was a nice rally on the upside and consolidation with big green days, rallies here. So those rallies are going to be there like this. It's not an anomaly. It's not under the bottom for this bear market, none of that stuff, right? When we talked about technical analysis last time, we were here, if you guys remember, and I said, because we are very close to the oversold RSI, you can expect a little bounce. And it did, and then we were back here, and then we had our another technical analysis meeting. We didn't actually get a bounce, but we did see some consolidation, and it pulled back again. As soon as the breached below this 30 threshold on RSI, it tried to bounce again a little bit, had a nice green day, pulled back again. Now we are going back down again. So retail traders are becoming more and more active, as you can see, which is not necessarily a bad thing. It means more liquidity and more volume. So not necessarily a bad thing, but what we need to see is that it's pulling back here. So that was month of September, as you can see, first week, very first day of the month, green day. And then second day, it opened nice, went up, ran into resistance at 50-day SMA, pulled back down, and then bounced back up again. So this was a very, very challenging week because there was no clear direction. We were near the major support level, as you can see, which is where it bounced before. So there was a possibility that we could see a big bounce here, or if it pulls back and break below, then it can go all the way down. So there were like two big possibilities here, and we didn't know which one it's going to take. So that's why, as you can see, it's reflected in our trade log. The first week, September 1st and 2nd, and then the following 3 trading days, as you can see, we traded very, very, very conservatively. Even at least the first day, we were like there, break even, just sell it. Don't take any risk. The trade that we decided to hold on to ended up going to zero. And that is telling that, and that's part of the game, because we didn't follow the stop losses and it went in any direction, like it went against us, right? The following week, the same week, it was a long weekend. As you can see, only 4 trading days. We opened on Tuesday, I believe, and two trades, 4 trades at most, and then 1 trade on Friday. In total, for that week, we took 15 trades for between about 2 weeks, which is this week right here. So September 1st, September 2nd, September 6th, 7, 8, 9, and 10. So this was the consolidation period where we did not know where market would go. For example, on this day, it bounced up, ran into resistance, closed red. So a very challenging week, and TradeLog shows you that it was a very challenging week. But we survived, and then come week 3, everything changed. Right, like week 3, we finally got a direction. So week 3 started at 12, ended at 16, and as you can see, 9. This was 12. It ran into resistance, and 12 was okay, but starting 13, we started seeing the direction that it is going down. It is running into this resistance that we draw, and on Tuesday, it opened below the trend line. So 1, 2, 3, and 16 right here, we saw a clear downtrend, and we took full advantage of it, as you can see in our trade log. In total, we took about 20 trades that particular week. Look at the numbers. First 2 weeks, 15 in total. Following week, 20 in total, and 1 losing trade, which was still a smaller. But yeah, 20 trades, only 1 loser. And one of those days was probably the best one in TRADEORE history so far. And that was this Thursday, where we completely nailed it, 100%, 4 trades. It hasn't happened before, but every single trade we took that day ended up big. And that is the beauty of market. All you have to do in order for you to be a successful trader in a long run is that you need to ride out bad days, because there is always going to be bad days. There's always going to be bad weeks, even bad month. People who has been in the market like 10 plus years, like myself, would tell you there has been bad years where you ended up losing at the end of the year. And that is fine. That's how a business works. You need to see this as a business. And business, you sometimes make a lot of money, sometimes your profit shrinks, sometimes you end up losing money for that year. And that is just part of it. And you need to start understanding that and change your mentality towards that. Because if you are just someone who is afraid of failing, then you should not be trading. You will never, ever, ever be successful. And let me tell you right now that you will never be successful if you have fear of failure, because everybody fails. This market can change in a blink of an eye and you will fail. And if you can't stomach that, if you can't come back to the market the next day with the same enthusiasm and same optimism and preparation, there is no way in hell you are going to last in this market. So listen to me. If that is someone new, there's nothing wrong with it. Some people are just afraid. It's just not for them. Risk is not for them. That's fine. Then take your money, put it somewhere else. It will save you a lot of money in long term. But if you are someone who is resilient and persistent and not afraid to fail, not afraid to fall down and come back stronger, come back smarter, come back the next day with same enthusiasm and just same zealous for what people say for life, but for market and making money, then yes, you will do just fine. And this is like a small, very, very small example of it. All you had to do was write out these 2 bad weeks and bam, look at that, like 20 trades, one losing trade. Any trade you took with us that particular week, you would have made money. And especially this day and the Friday and Thursday, and look at the numbers, it speaks for itself. We don't have to tell you or sell you on anything. And then come week 4 after so this is where 16th ended, and then come week 4, it was still in consolidation, but by now we established that market is weaker. We already broke the strong support level, and now we are back near the range where we were before. So again, anything could have happened here. So 20, so right here, 16 is where it ended. For 2 days, we consolidated, market pretty much moved sideways, and I believe there was a reason for it. I think some FOMC, and then it just tanked, and then continued to tank, and then tanked some more, and then we are back to the lows from before by end of the week. And we again took full advantage of this direction, this range, and the way market was moving, and it's evident from our week 4 trade log. Every single trade we took worked. 14 trades in total. And why 14? Because on Monday, because there was no clear direction, we only took one trade. The same thing happened again on Wednesday when there was a Fed meeting. We didn't want to risk too much, so we didn't take too many trades. But outside of that, on Tuesday, on Friday, on Wednesday, we took multiple trades and we nailed every single one of them. 0 losing trades. Now imagine 14 plus 20, that's 34 trades, 1 losing trades in 2 weeks. That will make up for everything that we lost from previous 2 weeks and more. And that is the beauty that I was telling you about. Ride out the storm and you will get into sunshine and you will make tons of money, but you need to be there to make money. If you quit in this first 2 weeks, if you accept your failure, you accept your fate and call it a day and just say, oh, this is not for me, I can't do it, blah, 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 then guess what? When the good part comes, when the market is good and we are good, then you're not there to take advantage of it. It's simple as that. You have to be there in the good parts to be able to take advantage of the market. And then week 5, again, we are back to pretty much moving sideways to move September 23. So week 5 started here. 3 days of consolidation, pretty much no clear direction, pretty much 4 days. And then on Friday, we finally broke down and moved a little bit lower, but for pretty much entire week, market was moving sideways. There weren't that many opportunities. We tried to take some good trades, ended up doing 3 losing trades, ended up taking 20 trades in total. A lot of them came on Friday. 3 losing trades. But overall, if you look at it, in the entire month, we had 4, 5, 6, and 8 losing trades in total. That is a very, very great record, and number speaks for itself. But what would I improve? That is the main goal of TradeLog Review. This TradeLog Review meetings are not for us to boost ourselves and tell you how good we are, because we are, and number speaks for itself. So we don't need to advertise for ourselves. But this is to look at the mistakes we made and how we can improve from here. And one of the glaring mistake, as you can see, and that pretty much destroyed our profit, was this 100% losing trades. 100% here, 100% here. We did follow stop loss here and got out at 50%, but 100% here, 100% here, 100%, 100%, 100%. That hurt our bottom line profit. And that is the mistake that you need to avoid as well. Never ever take 100% losers, because let me show you something. So this is, so at the end of the month, if you take 700 position, pretty much for plus or minus 700, like roughly $700 positions for every single one of our trade, you would have ended up with 4180. And but like all the car dealerships and everybody says, like, right, like your mileage may vary, right? So you may not take every single trade, your position will vary. So let's just say instead of 4180, you did half of it. That's still $2,000 for the month, right? Which is still pretty good. For $10,000 account, that's 20% of your account, which is fantastic. So, and that is putting it conservatively, because we're human, we make mistake, right? So let's just say we probably missed a couple of trades here that were losing trades, for example, like some people say, and it's fine. It's not going to change this bottom line numbers that much. But what will change is, let me show you. So let's just say instead of letting this one go to 0, we exited at 50 cents, right? So that's probably like about 75% stop loss. There you go, yeah, close to that. Let's just say this 120. Oh, sorry, not that. There you go, 77. Let's say this one was about 40. And this one is about 25. And this one is about 40. So what I'm doing here is I'm putting stop losses. I'm just visualizing and telling myself what would my numbers be like if I stopped out at break even, or I mean, at 75% stop loss, right? Like not even 50%, I'm just doing it 75%. 70 to 75, I would say. I mean, I don't want to be. Just by doing that, just by doing 75% stop losses, my number went for, if you remember, before it was 4180. From 4180, it went to 4805. It's almost about $600. Yeah, $600 difference just by exiting and having stop losses at 75%. I was able to $600, right? So this stuff matters. This is why we do TradeLog. This is how we visualize that what could have we done better. And this is probably one of the biggest issue most people face, including myself, is having strict stop losses. And for me, I am more lenient with it personally, because my account allows me to be, and because I make up for that 100% loss very, very easily. As you can see, at the end of the day, it did hurt me, but not as much. Like my account is not in negative. I didn't lose any of my equity or any of my capital because of that. So for me, even though it's a mistake and I work very hard on it, if it's a good week, like for example here, I let it go to zero this too, is because I've had two fantastic weeks. I was giving it more time. I was letting it be, I was being more patient, but when it went against me, it never recovered, and that's the end of it. And then I was like, okay, well, what is it gonna do? Like $30 or $30 per contract is not going to break or make my account in any way. So for me, it's okay, but for you guys, you have to have stop losses. Otherwise, you will never be able to recover, because big losses like this wipe out, like with this $440 loss. If you took that, you pretty much wiped out all these 3 trades in one trade, which is not good. Same thing here, 285, you wiped out this plus some. So your entire day of trades you wiped out with one trade. Not a good thing to do. But then again, like, if your account allows you to, it's fine. And you can make up for it, like how we did it here 2 weeks, fantastic. So at the end of the day, we took about 69 trades, 8 losses, 61 wins, 88% success rate, which is pretty high given the market condition. But we are proud of it. And 700% plus wins. 4 of those wins came in one single day. But yeah, fantastic month yet again. Sorry that I forgot to do that. There we go. But yeah, overall, fantastic month. We showed patience, we showed persistent, we stayed in the game. We had a plan, we followed the plan. Sometimes it didn't work. We got punched in the mouth. Our plan went out of the window. We formed another plan. That plan worked. We recovered everything. We continued to recover. And we ended up with a huge number at the end of the month. In total, this number doesn't really mean anything, but I just like looking at it myself. It tells me like how well I did percentage wise, but it really doesn't matter. But yeah, at the end of the day, we had great month. So good job, everyone. Some of the notes: sold too soon, again, sold too soon. Usually it's just like that. Either it's too soon or too late. You can't do much about it. The more experience you have, the better you get at reading the market condition and timing your entry and exit, right? It's never ever going to be right at the high of the day or right at the bottom of the day. We are all human, and human emotions are one of the biggest thing that matters here. So you're never ever going to time it right. But what matters is that you pull the trigger, you enter the trade, you took the profit. Profit is what matters. Nobody went broke taking profit, right? So either whether it's 10% or 110%, it's still a profit. And at the end of the day, it's going to build your account. So never, ever feel bad for taking profit. I see people make this mistake so many times. They're like, oh man, I only got 25% profit where it should have been 261% if I stayed in the trade. It doesn't work like that. 25% is pretty good. And if you waited for 261, it probably, if it went against you, you could have lost this 25% as well. So it's a 50-50% chance. This is very, very rare. Whereas if you continue to do this within 4 trades, you're already at 100%. Within 8 trades, you're at 200%. So consistency is the king. If you're consistently trading profit, if you're consistent with your trades, if you're consistent with following the rules, that is what going to matter, and that is what going to make you rich. And let me tell you, this profession that we are in has tremendous potential to change lives, but people are just too lazy too just too lazy to do anything about it. They just like to sit and just look at what they did wrong instead of what they have been doing right for so far, and that is the end of their journey, and it is what it is. But yeah, that was the TradeLog review. Let's take a quick look at technical analysis side of it. So yeah, like we discussed before, we are making fresh new lows in SPY. So these are the level that you need to watch on the downside: 354, 350, 343. And if that breaks 340 and then 332, will we go over there? I highly doubt that SPY will fall 30%, but we have fallen that much before, right? So anything is possible in this market. And this big support range that held on for 1, 2, 3, 4 times before, and this is small support here, these levels are all going to act as resistance on the way up. So this huge support that supported SPY for 4 times on, actually 1, 2, 3, 4, 5, 6, 7, 8, like quite a few times, let's just say that, that is going to be working against SPY now. As you can see, it already did. It already tried to bounce and failed at that level, or near that level already. So that level is going to act as a huge resistance. Over that, this level is going to be another one that is going to be a huge resistance. So all this support level start going to act as resistance level. So climbing up from there is not going to be easy. So keep that in mind. I will on the so keep that in mind. There will be green days or multiple green days in a row along the way, but overall it's going lower. We are forming the secondary trend line right here, as you can see. So first and foremost, we need to get over that trend line before doing anything else. And then the second trend line will come in picture. 100-day SMA is going lower. 50-day SMA that was pretty much sideways is finally curling back down. 100-day is going down. So overall market is weak and it can get weaker. So be prepared for that. Once in a decade type of opportunities are starting to come our way pretty soon. A lot of people are quitting stock market right now. A lot of people are like, oh, this is not for me. Oh, this is manipulated. Oh, this, oh, that. That's all noise. These are the people who has traded maybe a year or two, maybe 3 years at top in this market. Take it from someone who's been trading for 12 plus years now. This type of opportunities are once in a decade, and it's only going to get better from here. So stay in it, have your guards up, don't quit, and just wait for those opportunities to come. Start building your portfolio right now. And let me tell you, you will thank me 2, 3, 4 years from now. You will thank me that you did what I asked you to do. So just stay on guard. Don't go all out blowing everything, but don't quit or don't be scared. This is part of the game. It happens. There is a cycle. It happened in 2008. It happened in 2000. It happened in 1990. All the way since the inception of the stock market, it has happened. It will continue to happen. You need to be there when things get good to take advantage of it. Some people are so weak and so, what's the word I'm looking for? Let's just say so weak that they don't have in them to ride out the storm, to see the sunlight. Because at the end of every storm, there comes the sunlight, and to feel that warmth on your face, and the cold around you from the rain before, you have to be there. If you quit and move to different cities or different whatever, then you're not going to be there to see the beauty of it. So this storm is also going to end. In 2008, it took 4 years. In 2000, it took 2 years. In 2020, it took 33 days. How long this one will take, nobody knows. But that doesn't mean you can't make profit along the way. We did. We showed you how to, and we will continue to show you how to. You just need to be there. Anyway, so these are the things. So going up, I'm going into this month, I am more bearish than I'm bullish. I will be looking at more puts play than call play. But if the trend change, if there is a huge green day, some good news in the market, I'll be taking calls as well. I'm opportunist. And if I see an opportunity, I'm going to take it. I don't have bias. I am not a bull. I'm not a bear. Like I said, I'm opportunist. So if there is an opportunity, I'm going to take it. And that's how you should be as well. One day at a time, see what's in front of you, analyze it, make your plan, and then trade your plan. It's simple as that. What's going to happen next week, nobody knows. If people are predicting market is going to do that, yeah, you're going to see those articles all the time. The person who predicted 2008 crash, here is his next prediction. Yes, predictions are easy. If they are wrong, nobody's going to go back to that person and be like, hey, you predicted this and it's wrong. What about now? I listened to you and this and that. It never works that way. If you're right, they will blow up your story. If you're wrong, nobody cares. So bottom line is that nobody can predict what's going to happen next week, let alone next month or next year. So just trade what's in front of you. That's the end of the story. All right, let's go to QQQ. Same story here as well. We're making fresh new lows, breaking the lows from before. It is officially less than 35% down, I believe, or 34% down. Firmly down. Next support, if we break here, will be at 265 and then 261. And if we zoom out, right here is the next support. Big support is at 261 from before, and the minor support is right here at 267. In between 265, because it's a big round number, it could happen there. But yeah, again, another name that has the secondary trend line, which is very steep if you ask me. But nonetheless, it is a trend line and it is following that. So keep an eye on it. If this sell-off can intensify, then we could potentially see 261 this coming week. We have seen market drops like 7-8% in one day, which doing that in 1 week is not that big of a deal. Amazon is coming down. I will start to look. I will look to buy equity in it pretty soon. But this entire last week, it held the support when market was moving down. QQQ was moving down. It's been holding support since 23rd of September. Pretty much for 5 trading days, it's been holding this 133, 113 as a support. Break below that, it will tank to 110, 112. And then 110, because it's a round number, would be the next support. 109.50 is where the big support is from before. As you can see, if I can zoom out, yeah, from here. That's 113 right here, sorry. 109.50. Big resistance here, we should provide big support here. 113, as you can see before, it was a good support level, which still is valid and is still providing support here. So break below that, 109.50 would be the next big support level where you can possibly play some calls. I would rather play puts if on the break of 112.50 here. That's what I'll be looking at going into next week. Break below that 109.50. Then this 106.25 would be the next level, and then below that it will be 102. Can Amazon go there? Possibly, we'll see. It needs to break below the support level. There is no other steps trend line like how we saw in QQQ, etc. For Amazon, it's still following this big trend line back from August. Try to break out of it, didn't work. Pull back, try to break out again, didn't work. It's consolidating now, so we'll see what happens here. Google officially break out of this box that we drew before. It was here during our last technical analysis and is officially down about 36%. It broke below 96, which is a big level for Google. So below 96, as you can see, there's not much to it. 96 was a huge support level. So break below that. The minor support does come like at 90, about 93.75. So let's just draw a line there. There is a small support there, but break below that. The next is not until 91. About 5-6 points drop in Google is most certainly possible. And then this 91 level should provide good support level as it has before. Multiple time as well as resistance. So 91 is going to be a big level. But so far, no other secondary trade. From August 16, it's just been down and it is continually moving down. Not very interested in playing it on the call side unless there's a huge market move on the upside. Sharp moving down, not really interested. Apple is falling like crazy. It's weaker, and when Apple is weaker, the whole market is weaker. So keep an eye on it. We'll post some more levels on Apple during Monday. Watch list 137 is going to be a big level on the downside, which has provided support multiple times before. So watch that level on the upside 144, which is resistance level from before as well. So this is going to be a very crucial range for Apple. If it breaks below this 136, then it can go back down to 133.25. So watch those levels on the downside. Market is, again, I'm leaning bearish, so anything can happen. Netflix is a very curious name because it's actually been moving sideways instead of going down with along the other names. But main reason for that being is a lot of analyst upgrades and because it's already down so much. So but this 249, so I would just round it up to 250, is a huge resistance level on the upside. But what we did trade Netflix a few times last week, as you guys know, and that is because it has the range now. It moves $5, $6, $7, $10 a day, which is what we want as an option trader, right? So keep Netflix on your watch list like I have now. Next support level for Netflix is going to be at 230, which is where about 231, which is where the 50-day SMA is. 100 days SMA is finally flattening out. 200 days firmly down. So Netflix has a lot of work to do, but because of the range, I like it and I will look to trade it. Meta, not very interested. Nvidia, it's getting a little bit weaker now for my taste. It's already down about 64. It still has some good opportunities, so we will continue to trade it. But it is the secondary trend line. It needs to get over that to do anything worthwhile on the downside. 115 is a big support. 120 going to be a big support as well, which it was right here. But because it's so close, I'm not going to draw another trend line. It just makes it very messy. But 120 round number, and then 115.50 going to be level on the downside. On the upside, I am not very interested in calls unless it breaks above this trend line. CrowdStrike, very, very volatile name, been trading sideways. So not very interesting. On the call side, I would be interested in it if it breaks over 175. On the put side, I'll be interested in it if it breaks below 160. So those are the level I'm watching. I'm giving it $15 range to whatever it wants, but I'm not very interested in it until it breaks above or below this level I mentioned. Tesla breaking down, it's finding support right at the 100-day SMA here. 50-day SMA is still up. 200-day SMA is coming down a little bit. If it breaks below this level of 264 again, which is 100-day SMA, it can pull back down into 251. So keep that in mind. There are some support level, as you can see, where the one is right here and like right there, which is at 258. So there are some support levels that could potentially work. But once it's below all three moving averages, it's weak. And once the name is weak, we look for the levels of the downside, not the upside. Upside, I would be interested in it if and when it breaks over 281. Microsoft, another name that is very, very strongly down. We already have this trend line. It's following it nicely. It's not falling as fast, but it is falling. On Friday, it closed very, very low. On the downside, the level I'll be watching is 230. If it breaks below 230, then I will be taking puts in it. The next support below 230 is at 220. 530. Below that, right here. And right there. Right there. So those are the level I'm watching on the downside for Microsoft. On the upside, again, if it breaks above this trend line, then I'll be interested in it. Otherwise, I will just let it do what it wants to do. And that's it. Those are some of the names that I wanted to talk to you about personally. But there are other names I know, for example, that we traded on Friday. There is Costco, there is Lulu, there is Lulu is also coming back down to the support level. Break below that, it can go back to 260. Could be a good equity play if you start building your position around this area. I will look into that. Snow is another name. Did pretty good on Friday. We traded it, but it is still range bound. So we'll see what happens with that. FTNT, one of my favorite names that has been doing very good, is finally finding support. So I'll be interested in it again. We'll see what happens with that. But it is looking weak. So there are quite a few names that are getting in the range that I wanted them to be. So we'll see what happens there. But yeah, that's it for the names that I wanted to talk about. If there's anything else, feel free to reach out to us or post it in the trading room and we'll be more than happy to answer it. Just be respectful, guys. We do this because, like always, we want to help you. And we are not doing this for money. The subscription price that we get paid is not worth the amount of time that we're putting in. We're doing that because someday when we were starting out, someday when I was starting out, someone was selfless enough to help me even when it wasn't worth it. And because that person helped me, I got to be in this position where I am right now, where my financial future is secure, my family's financial future is secure, where I can live the life I want to live. And that is the reason I decided that we decided that we want to do this, that we want to help a little, giving back and helping someone. If it changes one person's life, that would be good enough for us. and that is why we do this. It's not because of money. So the reason I'm mentioning it, because it is not because of money. We are not reliant on your subscription fee, and we do expect respect, and we are more than happy to go out of our way to help you guys succeed in this profession. Just be respectful. That's all we ask for. We are humans, we make mistakes, but that does not mean that we are doing it intentionally. And when we get accused of that, it hurts. And that's all I'm going to say. And I take it personally. But anyway, like I said, feel free to reach out to us for any question you have. We will be more than happy to answer any and all of your questions. We're always available to help out, guide and answer your questions. Put it in the room. We have some fantastic member who will be more than happy to answer your questions if we are not available. We are trying to build a community where we all grow together and be successful together. So take advantage of it. Don't be shy. Don't be your own person trying to find a way to do it. You may be able to do it, but it will just take you longer. It's been my experience is that if you can simply ask, then ask. Don't try and figure it out yourself. It's just going to take longer. You're just going to make more mistakes. And it will take you a longer period of time to move on to the next puzzle, next problem, because there are so many problems to solve when it comes to trading. You have no idea. So cut your time, just ask. If nobody knows, then go and figure it out yourself. There's nothing wrong with that. But if someone has already gone through it, someone has already put time to learn something, develop something, or gain that particular piece of knowledge, take advantage of it. Build on top of their shoulder. That's what we are here for. One of the things that I always say to people is that take advantage of the mistake I made. I tell you guys not to repeat the mistake that I made because it took me 10 years to get to the point where I am. If you build on my shoulder, you will get there in 5 years because you're learning from my mistake and you're improving. Anyway, yeah, so feel free to do that. I hope you guys have a fantastic Sunday, and I will see you next month, next week, and next Monday. All right, have a good day.